Welcome to Just Some Guy Trading with 2021 World Champion Trader Kevin McCormick.
I'm Kevin McCormick, and this week's outlook for August 27th is an important one. I think we could be having an early bottom to this market, possibly mid-September. So we have a very important market outlook to share today, and that outlook actually brings together the correlation between the S&P 500, NASDAQ, 30-year U.S. bond, and the U.S. dollar. So I'm going to be covering these four kind of together, calling and highlighting the correlation between these products and the market bottom that I see forming. And then this week, we're going to finish up with a quick conversation about the grain markets and corn, to be specific. As always, this presentation is for educational purposes only. All right, this week we're going to start off by taking a look at the current setup in the S&P 500 futures contract. Important things to highlight here. You can see this week we bounced perfectly off of the 100-day moving average once and then twice again on Friday. Yellow line is the 50-day moving average. You'll see right now we are trading perfectly in this range between the 50 and the 100-day average. I don't think this range is going to hold. I expect this week for us to break the 100-day moving average, and that's when you're going to see everybody on TV talking about how we just broke a very important resistance level, and that could be a move to push the S&P 500 lower, in my opinion. But I think this is actually going to be what helps us form the bottom and the next leg of this bull market higher, starting sooner than expected. We'll get into that more here later. I personally went short the market again. If you've watched my Williams percent R video, took the Williams percent R trade here, got short the market. So I am currently short the S&P 500 myself. Currently with the S&P 500, we still have the commercials selling. The hedge funds have almost covered a very large percentage of their shorts. This is another reason why I think we could be having the bottom forming, because they're getting ready to go long here. And on a valuation perspective, S&P 500 is still overvalued compared to gold and the U.S. bond. And as we'll talk about more here in a minute, we're almost undervalued compared to the dollar. And that's part of the dollar rally that I see reversing that we'll discuss here shortly. Next up, let's take a look at the S&P 500 with the DeMARK indicators. I had highlighted this before and you saw it in the last chart. This is the next area of resistance I see coming in around 4,300. Probably the area that I will be looking to cover my short position. I think that's going to be the next area of resistance. We could go all the way down to almost 4,200 with this correction. So those are the areas that we want to be keeping in mind. But as I highlighted, I think we are coming up towards the end of this correction. As you can see here, we hit our DeMARK 13 sell signals. They weren't perfectly timed, but we had them hit and then the market rolled over. We had to buy 9 setup, which started another countdown to 13. We're currently on a 7 in combo and 5 for sequential. So, another 5-7 days down, like I said, a couple weeks, we're going to get our buy 13 signals in combo and sequential, and that's when I think we could see the market rally. If we take a look at the NASDAQ chart, and you can see here, very similar setup. We blew through the 9 buy here as well. Also on a combo 7 countdown here as well. So I always like it, and my viewers know, when these are lined up. So right now we have the NASDAQ and the S&P 500 in line with each other. And that's why I think that this pullback could be coming to an end shortly. But before we get into all of these items, we really need to address the correlations that are going on in the market. And I want everyone to remember and highlight, let's go back to the S&P 500. Keep in mind, when you're looking at your charts, that October of last year is an important area to look at. We got these 13 buy signals back then in the NASDAQ and the S&P 500, and that's what triggered this rally and this area of resistance that we recently broke through, which is also why I think this is where it's a good area to take shorts. So next up, let's talk about the correlation in the bond market. So we'll take a look at the daily chart first of the 30-year bond. This has been in free fall over the last month, as you can see here. And this 13 didn't hold, but here recently, we just came through here and got our combo 13 and a 9 buy signal. The market did react. We held perfectly this area of resistance. But if I zoom back out again, you're going to see I keep referencing this October low that was hit before. Look what happened at that same time, October 2022. We hit a 13 bottom in the bond market. Right now, the market has been going down when bond market yields increase. So until the bond market yields stop going up, it's tough for this market to bottom. But that's why I'm saying this correlation here is very important. Because if we stop going down in the price of bonds or the increase in yield, then the market is going to start to rally. And we have that signal right here with this 13, just like we got it back in October 2022. But that's not all. Let's jump back into TradeStation and take a look at some of the other indicators we have going on. All right, taking a look at the 30-year bond and TradeStation, we can see here that once we break through the 18-day moving average, we have a lot of space to move up before we hit resistance in the 50-day moving average. When it comes to the commitments to traders report, right now the commercials have been heavy buyers of this bond, while the hedge funds have been getting short and continue to add to their shorts. And as you would expect with a move like this, sentiment has been bad in this product. And then on a weekly basis, we're supposed to be moving higher in the bond right now, but we're moving lower. And I think it's time for this move to come to an end. And just a stop and small reversal will allow the market to start move higher. And the last thing to look at here, and as my viewers know, my favorite index or indicator for calling bottoms is the ADX. And we just crossed 40 last week. When this correlates with the DeMARK 13 that we just received, it's over an 80% accuracy rate of calling a turnaround when these two indicators line up, and we have that happening right now. That's also why I highlighted right here on this chart. This is that October 22 period that we just showed you on the DeMARK. This is when we got the DeMARK 13 there. ADX was in line then, and then look at this enormous rally we had in the bond market, which also led the stock market higher and started the next bull market. This is why this is so important right now, this correlation between the stock market, the 30-year bond, and the US dollar. With that said, let's take a look at the US dollar next. So if we just take a quick look at the US dollar, kind of weird convergence of the moving averages here, but more importantly, let's jump into the commitments of traders report. The commercials have been buyers of the US dollar, but as you can see here, they've started to slow down their buying of the dollar. This has been the top of the range for the US dollar, going all the way back to, you guessed it, 2022. Valuation right now, dollar is overvalued across the board. And as a contrarian view, sentiment is high. We're back at this range where we have pulled back before. This is very important because the US dollar, a strong dollar, is a headwind for most of the large cap stocks because of their international earnings. If we have the dollar start to move lower again, it's going to be a tailwind to earnings that are coming up over the next couple quarters. And then right here, right now, from a seasonal perspective, we should start moving lower in the US dollar. But that's what we have highlighting here. One last thing I want to look at is the US dollar with the DeMARK indicators. So if we jump over to the dollar chart here, you're going to see the DeMARK indicator has been working pretty well on the dollar this year. 9 sell signal, little early on that one, but this 9 buy was great. This 9 sell was perfect. And along with this 9 buy was great. But then this recent rally we just had, we blew through this 9. We just had another 9 sell setup, and right behind it, we got sequential on an 11, and we got combo on a 12. So this is the correlation I'm talking about, folks. The last time this happened, when the dollar topped, you guessed it, October 2022, market started its rally. So in the next couple days, we'll have a few more days higher in the dollar. That's going to trigger our DeMARK 13 sell signals. Then we will have a perfect correlation between the US dollar, the bond market, and then once we get this last pullback in the S&P 500, that will trigger the short-term bottom in the market, and why I think we could be set up for an early rally in the stock market, which is going to catch people off guard and start the chase of performance from the hedge funds. Right around the week of September 11th is what it's lining up with right now. I will be doing a deeper dive special report coming out soon to discuss this in more detail, but I wanted to share this with our viewers so that everyone can see what is playing out and get ready for the game plan here. The other important piece about this dollar move is, as the dollar has moved up, it should be a weight in the commodity markets. So as the dollar starts to move down now, it's going to be good for gold, silver, and the rest of the commodity complex. So with that said, let's finish up by taking a look at corn. All right, we're going to finish up by taking a look at the corn chart, which is an ugly chart. But the reason why I'm getting bullish on corn and the grains in general is because of the fundamentals, not the technicals. Last week they did their evaluation of some of the crops in the fields, and all of the yields for corn and soybean look like they're going to come in lower than expected, which would mean that we're forming a fundamental bottom in these markets. And on the next revision of the USDA reports, if yields go down, that means it's bullish for the commodity because there will be less supply than we're expecting, and we could be heading into a rally. So that's why I'm taking a look at corn. Soybeans have already been staying at a pretty high level, haven't had the pullback of corn. That's why I'm a little more interested in corn right now than soybeans. But by taking a look here at the chart, you can see just nothing positive about this chart. We've been in a steady downtrend. But the reason why corn is interesting me more than soybeans is because you've heard me say it before, we've been in a nice range in the corn market for almost 2 years now. And this range, we are bumping right up against it again. And you can see here in the past, when we got into this level, commercials started buying. They are buying again. So the people who need to use corn for making their cereal or bread and other products are in there buying this market at these levels. So that's why I'm interested between the fundamentals and also seeing the commercials in here buying corn again at these levels where they have in the past. I think corn is setting up for a bottom, and we should start looking for and taking buy signals in corn. Thanks for watching Just Some Guy Trading. Good luck to your trading this week, and watch out for my special report on the stock market coming out in the next week. And as always, please hit like and subscribe.